let's get to 1,000 subscribers. Please help support Joni and our team by subscribing and turning on notifications. Today, we're diving into some hot topics. We'll start with the buzz around the AI bubble and figure out if it's just a fad or a real goldmine. Then we'll cover some shakeups in the chip industry as the US government prepares to take on a bigger role in major chip companies. We'll also look at an interesting forecast that suggests retail investors might be due for a breather this September. JOYUP Invest Podcast. Invest better every day. Hello, dear listeners, and welcome to Wall Street Wake Up, the show that wraps up and updates you on what's been happening in the U.S. stock market and markets around the world over the past 24 hours. Let's kick things off with the news that got everyone's attention. The brilliant CEO of OpenAI, Sam Altman, himself said, "We are in a phase where investors as a whole are overexcited about AI." He even admitted that the valuations for AI startups are insane. But I want us to look at this from a different angle. What Altman said might be a warning to be mindful with our investments, but he still believes in AI with his whole heart. And most importantly, he announced that OpenAI is ready to spend trillions of dollars to build new data centers in the near future. This isn't a signal that AI is going to crash. It's a signal that AI is going to come on strong like never before. The massive spending spree by tech giants like Microsoft, Amazon, Alphabet, and Meta confirms that this isn't just a trend. It's a race to build the foundational infrastructure for the future. Think back to the dot-com era over 20 years ago. A lot of companies failed, but then giants like Google, Amazon, and Facebook rose up and changed the world. Altman himself said, "History will repeat itself." Some companies might fail, but overall, AI will create enormous value for society and change our world forever. Next up, let's look at the market overview. The US stock indexes are a little down right now, and tech stocks are feeling especially weak. The main reason? Investors are in wait-and-see mode, waiting for the upcoming Jackson Hole Symposium. It's an annual meeting where investors listen for signals from the Fed chair, Jerome Powell, about the future direction of the economy and monetary policy. This has put the market in a risk-averse state, leading to some profit-taking in tech stocks that have had big rallies recently. This news shows that the market is just taking a breath. Think of it like a marathon runner who pauses to get a signal from their coach before starting the next leg of the race. So I think this is a great time to reevaluate our investment strategies to be ready for any changes that might happen in the future. Our next story follows up on yesterday's news. The US government is considering taking stakes in major chip manufacturers like Intel, and now they're adding more, including Micron, TSMC, and Samsung. This might sound concerning, but if you look closer, it's a clear signal that the government is taking the security of the tech supply chain very seriously. The government's goal isn't to control these companies' every move. It's to ensure that the US can produce chips critical for national security on its own, without relying too heavily on other countries. This move is a significant long-term investment by the US to maintain its leadership in technology, which will ultimately benefit the chip companies themselves in the long run. Now for a topic that hits close to home for many of us. According to an analysis by Scott Rubner, a brilliant strategist from Citadel Securities, retail investors might slow down their stock purchases in September, which is typically the slowest month for retail investor activity. But I want you to look at this in a positive way. This September pause could be a golden opportunity for us to review and plan our investments. Instead of chasing trends, we can use this time to research companies we're interested in or strengthen our portfolios. This way, we'll be ready for the market to get back into high gear in the final quarter of the year, which is usually when things pick up again. To wrap things up, let's take a quick look at some small cap company earnings. Jack Henry & Associates. This company provides tech solutions for the financial industry. They reported earnings that were better than analysts expected, but the stock was down slightly after hours, likely due to the overall sluggish market. Toll Brothers, a luxury home builder, their revenue was better than expected, but new home sales declined. The CEO even warned about weakening purchasing power, which lines up with the broader economic concerns many people have. Lazy Boy, this well-known furniture company, reported first-quarter earnings and revenue that missed analyst expectations by a lot. The stock dropped sharply by 17%. The main reason? Consumers are starting to delay purchases of non-essential goods, which could be a warning sign for other companies that sell luxury items. In the world of investing, the news is always full of volatility, with both good and bad stories. But our perspective is what truly determines our investment results. Even with warnings about an AI bubble, if we look deeper, it's a sign of a major transformation that will create long-term opportunities for investors. And even when the market is shaky from political news or disappointing earnings, it's a good time to find good stocks at a good price or strong companies to invest in. The most important things are to educate yourself and invest with a clear mind. Finally, no matter if the market is up or down, I want to be an encouragement to all of you to invest with joy and confidence. I know you can build wealth for yourselves. I also want to say a big thank you for all the great information today from investing.com and CNBC. Now, let's move on to the stock prices related to today's news. In this next segment, I'll analyze stock prices for you live with daily updates during our JOYUP Forecast. Let's start with the market darling NVIDIA, NVDA. This stock has shown remarkable long-term growth and a powerful bullish trend, with its price soaring on the charts. But with great heights comes the need for caution. The indicators are now flashing a divergence signal, a subtle warning that a pullback or correction might be on the horizon. Don't be alarmed though, the primary trend remains bullish, so this correction could simply be a brief pause before the stock continues its climb. As long as the price holds above the key support at the orange trend line, the stock remains in a safe zone. Next, let's look at a key competitor, AMD. This stock has been quite volatile but maintains a long-term bullish trend. Recently, the price has entered a narrow trading range or sideways movement. The indicators are also showing a divergence signal, which could hint at a pause or a potential trend reversal. If the stock fails to make a new high, the price might trade sideways or correct as shown by the chart. The resistance is at the previous high, and support is at the lower trend line. As long as the stock stays above this line, it's still considered to be in a bullish trend. Now for a stock that reflects consumer spending. Lazy Boy, LZB. This furniture business is highly dependent on economic conditions. The long-term chart for LZB shows a clear bullish trend, especially as the price recently approaches its old resistance level. A break above this point could signal further gains. The stock's key support is the price range where it hit its lowest point before a strong rally. On the other hand, if it fails to break through resistance, the price may correct or pull back a bit. For Jack Henry & Associates, JKHY, the company provides tech solutions for the financial industry, a stable business with steady revenue. The latest chart shows the price starting a slight pullback, and technical indicators like MACD and RSI are showing a divergence signal. This is a warning that the stock might be heading into a downtrend in the short to medium term. The key support is the long-term upward trend line. If the price reaches this point and bounces, the bullish trend remains intact. However, if it breaks below this line, it could be a clearer signal of a downtrend. Finally, we have Toll Brothers, TOL, a luxury home builder sensitive to interest rates and the real estate market. While it carries risk if the market slows, its chart shows a very strong long-term bullish trend, with the price surging rapidly and consistently. The key support for this stock is the orange long-term trend line, a point where the price has previously touched and rebounded sharply. As long as the price stays above this support line, the bullish trend remains strong, and it has the potential to keep climbing in the future. All of this is just my personal view. It's not investment advice. Please use your own judgment and do thorough research before making a decision, because all investments have risks. Before we say goodbye today, if you're a stock trader and you have questions but don't know who to ask, feel free to leave a comment and we can chat. See you next time. Bye-bye.